In this video, I'm going to tell you the story behind those two trades that I took this week, and both trades ended up as winners. This is how we start for the month of September. The first trade was on the Aussie dollar. I already got this level marked up last week. And Friday, the market closed around here. And I was looking to wait for the market to get into this kill zone that I already set out. And as you can see, it's on the 4-hour time frame. The previous level here, that's an inside level that got violated by this candle. So that big high momentum candle has broken above and closed above the previous structure shelf here. Then once we got that confirmation here, I was waiting for the market to get to that area. The market then got to this area here. Once the market was trading inside here, what I did, I dropped down to the lower time frame. And if you can see this level here, this is a level that the market has been respectful of in the past. So how do we know that? So over here, that's where the market retested that level in the past as a resistance. Over here as support, over here as support, over here as resistance. And if we were to go back, you could see the whole history of the market or of that level that the market has been respectful of. Once the market got into that level, then I was waiting for a double tap. A double tap is when the market make a first tap, then the market create what's called the neckline or a very shallow pullback to then retest the previous high or the previous top, and that's why they call it a double tap. So there are other rules that I use in order for me to validate my double tap, and the double tap must be valid. And for me, the double tap must take place in an area where I know the market is most likely to reverse. Not that the market will reverse, but where the market is most likely to reverse. So in that instance here, I left this here, my risk reward ratio, as you could tell. I got out at 65 or 6. That was a 2.6, almost 2.7 to 1 risk reward ratio. This is where I entered, and I'm going to drop down to the lower time frame or my trading time frame. As you can see here, the market got into that level, and you could tell the market got into that level with very high momentum candles, and then the market started to put those lower or indecision candle. The market put a doji candle and another doji candle. This is signs of loss of momentum. I want to see loss of momentum once the market get into that level, so I can look for my double tap. This here was the first tap, and this is the neckline. This bullish candle here, this is what validates the double tap. Now, for the double tap to be a valid one, the second tap must at least touches the previous close of the first tap, but must not close beyond the previous highs. So if this candle got above this candle here and close above, then this would be an invalid one. Now, since this was a valid double tap, I was able to get in next bull market. And what happened next? The market dropped. And that was a pretty straightforward look for an area of interest or higher time frame. And as you can see here on the daily time frame, this level, you can see it much clearer. So I've identified my higher time frame, then drop down to my trading time frame, get a more precise kill zone, then wait for the market to come into my kill zone, then look for my trade setup. In that example, that was a double tap. The next trade setup was an advanced pattern. As you can see here, the market has been consolidating. The market has been consolidating since here. So since the 25th of August. So last week. So all last week, we've seen nothing but sideways movement. There was a Gartley pattern that completed down here. That's the pound yen. I was looking for that bear Gartley pattern, and this here again, that decompletion was at a previous level of resistance that the market tested in the past. And as you can see here, if we were to go back, you see that market has been fighting to get above that level. August the 12th, we had a double top. And then on 18th of August, we see a retest of that level. That's 3 times. So if we were to count the double top, this would be 4 times that the market tested that level. And if we were to go back in the past, we would see that the market has been respectful of that level. This level here is a level that the market has respected, and plus it's a psychological number, and it's the 200 mark for the pound yen. So on a 40 time frame, we can all agree that is an X to A leg. So for the B leg, we need to get a 618 retracement from X to A. This was a 618 retracement. For the C leg, we again need to get a 618 retracement from A to B. And that C leg must not spike below the A leg. So we did not have any violation of our A leg. And for the decompletion, we need to draw our fib extension from A to B, then looking for the 127 extension, and then of course stops would go at 113 inversion. This here, we had a massive stop on this, 56 pips for the stop loss, and then 80 pips for the target. If we were to draw our XABCD pattern, then it would look something like this. Yeah, as you can see here, I got into this, I got triggered at 9 p.m. last night. So I went to bed. So I was not around to adjust my take profit level with price. If I was up to adjust targets with price, then I would have to do something like this. Then instead of getting a 1.4 to 1 risk reward ratio, then I would get almost a 1 to 1. So a 1.1 to 1 risk reward ratio. So this was a pretty nice trade. Now, all I have to do is to sit on my hand and then wait for the next opportunity. And this is real trading. That's how it's done, and there is no fluff. If you'd like to follow my signals, I will be launching my very own signal service very soon. And if you want to take part of that, you can click the link in the description below where you can reserve your spot. That way you can be first to know when I launch the signal service. And with that, I'm gonna say to plan your trade and trade your plan and don't go broke.